is the renminbi move that we've seen, this 12%, just about global trade? Is it just about competitive advantage? Is it just about containing their 40 or $50 billion of a month of trade surplus? And is there something else going on here? This picture gets that across. On the right-hand side, perhaps we have the renminbi basket that has the 13 currencies. On the left-hand side, we just have the SDR, which just included, beginning October 1, the Chinese renminbi at the expense of the British pound, at the expense of the euro, and slightly at the expense of the dollar. The SDR stands for Special Drawing Rights, is a global currency alternatives, which really gets us back to the after World War II structure of globalization and how the world works in safety. The SDR is meant to be how countries can borrow from a global international entity like the IMF, and by including the renminbi, it is de facto become a reserve currency, along with the dollar, the pound, the euro, and to some degree the yen. These things are very different than the trading basket that's on the right, which is really the renminbi index. But the renminbi index doesn't even quite capture the trade relationships. When you look at a currency's valuation and whether it is a reserve currency or not, there are a lot of factors to consider. So the SDR and the renminbi index still don't quite get the answer to the question above, which is, what is the renminbi, and is it really just about global trade or about being a reserve currency? And hopefully I'll get into that in the next slide. Here are the weightings of the renminbi index. And you can see here that the euro is just under the dollar in terms of the weighting at 21.4%. The interesting thing here is that the dollar and the euro really are higher weighted in this basket than the global trade would suggest that they should be. So, you know, the US trades around the same as Europe in terms of its share of exports that it receives from China, at around 14.5%. This has been consistent through good times and bad times. So there's a little bit more going on here in the renminbi index than just global trade. The other notable thing here is that, you know, suddenly you have the Russian ruble involved here. And the Russian ruble is punching well above its weight in terms of its global trade with China. Also, you see some currencies that aren't included, notably Mexico, Korea, and India, all of which have good trade relationships, but aren't included here. And why? The index is really reflecting a mix of two things. One is the trade relationships. Two is the actual financial relationships. And that's why you might see an overweight in some of Asia and the Russian relationship, where the flow of capital back and forth between Russia and China is on the increase, and it's a notable thing to pay attention to going into the next 5 years. So the renminbi index is a mixture of capital inflow and outflow and global trade. It makes it a rather confusing way of looking at how the authorities really want to view their relationship and their value of their currency vis-a-vis the dollar and all the other currencies that matter. That makes it a little confusing. Adding to that confusion is the SDR, which is clearly part of the story. So on this chart, we have the BIS currency basket, which really weights the renminbi in both trade and capital flow terms against the RMB basket. And you can see, even if my explanation for the renminbi index was accurate, it's still not perfect, because the BIS probably is being a little bit more literal in those relationships. And you can see that, again, to pick on the Russian ruble, which is 13 on the BIS basket, reflecting trade and capital flows, it's still number 7 on the RMB, official government basket. So there's some interesting things that are going on in the renminbi index that reflect political realities more than just economic ones. And I think that really matters to how you have to view the SDR. The SDR inclusion is meant to be a political statement by the Chinese that they are a reserve currency available to Greater Asia. And you can see that clearly in the makeup of the renminbi index, as opposed to any other way of looking at things. And I hope that gets across one of the key parts, which is the relationship of the dollar or the yen to the renminbi matters greatly, but the bigger picture for the valuation story of where the Chinese renminbi is going to go is a political one. It is, how does China make the renminbi a more international reserve currency over the next 10, 20, or 30 years? And the index reflects that.